Hello, everybody, and thanks for being here. Can you hear me? Everyone's got me there. Great. Look, we are talking about protection of digital assets, innovation, security solutions for digital currency exchanges. And I think it's actually really relevant. Obviously, we're looking for anyone that's just been in the previous discussions, exploration of financial crime, risk, resilience in a very much evolving world of fintech. So I'll quickly go through our fantastic speakers we have here for you today. So Caroline Bowler is joining us. Caroline's got 3 years as CEO at BTC Markets Exchanges and has been a strategic advisor for Blockchain APAC for the past 5 years. So welcome, Caroline. We've got David Ball with us as well. He's director at Bitgo up in Brisbane. I think Dave is with us today, and he's a founding board member, or was a founding board member at FinTech Australia as well. So welcome, Dave. And Shane Verner is on the panel also, who's the National Sales Director at Fireblocks and a very well-known face in the crypto scene as well. So welcome along, Shane. And I think we'll jump right into it, and I'll put this out to the panel, and we'll go straight into what is the importance of custody providers. And we know really important after the year that we've had, what's the importance of custody providers in the landscape today? Maybe I'll jump over to you, Caroline, to start off with that question.
Great. Thanks so much for having me, Tracey, and hope you can all hear me loud and clear. So sitting here at the head of a cryptocurrency exchange, the importance of custody, I think, is always at the very front of my mind. It's probably, the number one risk, followed alongside by regulation as a business, a risk and I suppose opportunity if you're sitting in Fireblocks and Bitgo. But it is the number one obsession that we have, is around where is our custody, where is our crypto, and how well is it being looked after from a custodial point of view. We also know that it's something that's very much at the front of mind as well of the regulators. We know that Treasury here are looking to put forward their proposed paper, their proposals for cryptocurrency custody mid this year. So it's top of mind from a regulation point of view. But when you talk about the risk and then the opportunity that comes with it, if we manage to nut out a proper custodial solution, a proper custodial framework rather, in Australia, that is only going to entice more institutional inflow and more investor inflow into the cryptocurrency asset class in Australia. It certainly will put us, if not on a par, and it will also put us ahead of some of our global competitors in this space. And I think it's something that, that everybody in the industry could agree is a good thing, whether you're an investor, as I say, or running an exchange itself, or, regulator or any other stakeholder. You want to see a well thought through, robust, functional cryptocurrency custody solution, as opposed to those that currently exist in traditional finance. So that would be my view from sitting here in the hot seat at BTC Markets.
I can see, Dave, you're nodding along there. What are your thoughts?
Look, Caroline said it fantastically well, as she always does. But, despite this industry, being about trustless, it's ultimately all about trust. And if we're going to grow and we're going to take that next leap as an industry, we need to take that leap in trust. If we want that institutional money to come in, they need to trust. If we want the non-early adopter crowd to come in and come back and stay back and get asset prices back up to where they were, we need trust. And one of the key ways to do that is obviously strong custodial arrangements where, ultimately retail customers right through to institutional investors trust that their assets are safe.
Short thoughts there, Shane?
I agree largely with what my fellow panelists mentioned. Yeah, we're seeing on the back of the, I don't want to talk about this too much, but it was the FTX debacle and others like it. We've seen an enormous inflow of assets back into Fireblocks wallets. We have some 1,700 institutional clients around the world and some 95 here in Australia and New Zealand. And unfortunately, that inflow was coming off centralized exchanges back into more trusted environments. Everybody got anxious, and we've seen. I joined Fireblocks in 2021, and the global market cap was some $3 trillion then, and I think we're over $1 trillion now, but that's an extraordinary contraction. So yeah, we're seeing trust in tech providers. We're seeing trust in governance layers, internal governance layers, and that can't be overlooked. Who can sign a transaction, under what conditions, when, and for how much, and how much do we want leaving our platform each day? These things are more and more relevant today than ever before. So yeah, trust is the theme here. And if we as a community, as an ecosystem get together, and I'm not a kumbaya guy, but I think it really is time that we learn, we begin evangelizing better as a community to bring all of those builders back in, whether they're the banks, the big end of town, whether they're governments, and I'm in here in Auckland talking to governments and associations for the rest of this week, getting their trust, but the real entrepreneurs that we talk to day by day, you know, those young men and women driving to build Web3 plays out there that's just jobs and growth.
Well, we've just touched on trust a number of times there, and when we know what happened last year with Luna and then FTX, and you've talked about people taking money off exchanges and feeling comfortable to bring them back on again, which I see is happening now. But how are people using different types of custody now? I might throw to you, Dave, to start that one off.
Yeah, sure. It's a good question, and you know, ultimately you can kind of look at the whole custody kind of space with a broad stroke as kind of being, you know, self-custody and then, you know, third-party provided custody. You know, each have their benefits, each have their pros and cons. Something that we've seen, I think, more and more since FTX is basically what Shane has said. It's that people are starting to realize that they don't want to leave their assets with an exchange. You know, FTX, for all of its faults, it was a bad actor, but it was also enabled by a bad system. And what we're seeing more and more in this industry is a multi-custodial approach. So it's not just about also trusting one custody provider or one custodial approach. It's about using the right custody and the right, I guess, option for the right kind of offering. So, you know, when you handle risk, when you handle custody yourself, there's a lot that comes with that. And, you know, ultimately that's, again, you know, not to keep banging on with FTX, and I don't want this to become an anti-FTX panel conversation, but, you know, when John J. Ray came in, he kind of realized what was going on in that system and went, you know what, we've actually got to use a more proven model here. And I'm, you know, not here directly to promote Bitgo, but, you know, he moved a lot of those assets and FTX's assets to Bitgo, to a regulated and qualified custodian. And that's what we need, right? We need the right approach, the right custodial solution for the right, I guess, provider, for the right business, and for the right risk profile as well. You know, there's lots of different custodial type solutions out there. Our CEO, Mike Belshie, has a great saying where he says, you know, not all custody is created equal. There's all different kinds of flavors. And, you know, back on, I think, Caroline's point from, you know, her first answer, you know, as we kind of look forward to kind of the post-reg market in Australia, I think what we want is some regulation where it's really clear what custody means. We've got a really functional framework where when someone says we provide custody, consumers, institutional investors, everyone is ultimately, you know, clear what that means. And that will just, again, build trust in the industry and get everything back to where, you know, I think Shane before said 3 trillion when he came into the industry. That is an extraordinary contraction. It'd be great to be back to that $3 trillion figure. And that's going to come from clear frameworks and obviously clear and proper operators operating in this space.
If banks keep disappearing, we might see that resurgence back to 3 or maybe 4 very soon. Not that I'm wishing that at all.
And if I may just be a bit of a contrarian, I know that the narrative was that the crypto left the centralized exchanges, but B2C markets saw a net inflow. We were a net beneficiary of that institute will not be mentioned again, but we were a net beneficiary. So I think it kind of points to that story around trust, that the organizations that are trusted, you know, that's where clients want to put their money, and it's where clients want to put their assets. And particularly in this asset class where, you know, longevity counts, and I think that's probably what our clients responded to. Longevity, but not just longevity, but also that the foundations are solid, and as much as can be solid in an industry that's had to go through puberty in front of everybody. You know, we've had to grow and change and evolve and go through all the bumps kind of in full on public glare. So I can remember when I was talking to Senator Bragg a couple of years ago on the ASX floor, and I said to him at that point in time, please regulate me. And he said how unusual it was to have an industry that's asking for regulation. But I think the reason why this industry wants regulation, contrary to the public narrative around what we're all like in crypto, it's because we understand that people want to trust us, and we want to be able to trust our industry peers. And once we get that kind of regulation, but a proportionate, appropriate regulation, not just the jackboot on our neck, but once we get that in place, it's just going to be the sky's the limit. So 3 trillion and keep going. So I think we're all in agreement on that. That is just, and the fact that this is within touching distance of Australia, the fact that we have got this opportunity to take, if not necessarily the lead, but to be a really fast follower in this, it's really exciting.
Mm. And I'll just go back a moment, Shane. You touched on the banks there and mentioned them. And is this a situation where the custody providers become the new banks?
I'm not sure I'd be so bold to say that, Tracey. We've publicly gone to market with 2 of the banks in Australia, as you well know, with the ANZ Bank and their $1 DC stablecoin program of work, which shockingly is nearly a year ago. And they continue to develop new use cases, particularly in the tokenization and particularly in the ESG space around that. Last week, you may have seen us go to market with National Australia Bank and a world's first foreign exchange cross-border transaction intrabank between Australia and Singapore, but nonetheless wildly appreciated across the whole market. That, however, doesn't lead me to immediately draw the conclusion that the banks are going to be crypto custodians. Banks consistently talk about digital assets broadly, and that's a much bigger church. I don't believe that anybody is going to go quickly into that crypto custodian, offer that as a service in the Australian market to retail clients anytime soon. There may perhaps be institutional plays, but what was it, a year ago that Sophie Gilder at the Commonwealth Bank of Australia released their internal program of work offering retail crypto custody services to buy, sell, hold to their, it was their staff, a cohort of their staff that they offered that to. But when the first crisis hit in about May last year, that was knocked on the head. So I'm not sure, Tracey.
Look, I know that you can't say too much about the RBA side of things that you're working with at the moment, but I'd like to get your thoughts, Caroline and Dave, on the central bank digital currency pilot that's going on at the moment. Really quickly, it's slightly off topic, but I still feel it's all very relevant. If you want to give me a bit of your thoughts there.
I'll jump in first on that one. So I think that a central bank digital currency will be fantastic at a macro level. I think it's an institutional, there's a use case we made at institutional level for interbank payments, for settling in the money market overnight. There's a lot of use cases there. It also would put us on a par with some of our international peers. I think, in terms of CBDC. I think the role of stable coins can then be probably better developed at a micro level, at individual peer-to-peer payment level. I think there's a lot of value to be explored there. Or I think overall, any economy, any country that's sitting on their hands on CBDCs are going to have to play catch up because, they're coming and the source is bolted. So it's great to hear that Australia is taking this opportunity and exploring it thoroughly, and I understand that the industry response to it has been overwhelming. So that's a real positive. I'll pass the conch over to you now, David.
Again, you said it well, Caroline. I think ultimately it's good for building trust again, right? If you've got an entity as big as the RBA, ultimately getting engaged in crypto, even though it's to a stable coin perspective, it's not into kind of more risky asset classes. I think that's great. And again, it's, the more I think we want institutional investors to come in when RBA and these other big players are playing in it. And again, with the big banks as well, I think, again, it just helps build trust. I think it's great for our RBA to be doing that and ultimately keeping us competitive on a regional level in APAC. We see that a lot. I think each region is going to have a power in crypto, or each region is definitely having markets that are competing to become that power in crypto. And it's important that we don't lose that future in Australia. And obviously the RBA doing these important things is going to help with that.
I was at the launch 2 weeks ago at the Sydney Mint, which is one of the coolest places I've ever been. When the invite came out, I thought it was going to be some sort of bar or nightclub or something, but no, it was the actual, 1825 Mint. And they announced 14 use cases, and the digital finance CRC stood up there and gave their spiel, but no crypto was mentioned. It was very much CBDC, stablecoin, digital asset.
Mm-hmm.
I think the most surprising thing of all there was the ANZ Bank and the Commonwealth Bank actually joining together, actually collaborated to do their own use case, again, in that ESG, biodiversity, tokenization married to the leverage of a couple of stable coins. It's very cool stuff.
Don't know if I like that, to be honest, but the joining of those two powerhouses. But let's bring it back to security.
What could go wrong, Tracey? Come on, the ACCC give it a nod. That's all we need.
Bringing it back to securities for a moment, and perhaps we'll look at what role does insurances play, and is it tokenistic? So maybe who wants to give this one a go first up? Everyone's hands popped up. Wow, okay.
I'm happy to touch on it from a regulated custodial perspective. I mean, if you're kind of a self-custodial, provider, or you're holding your assets yourself, it's hard to get proper insurance for that, and therefore to protect yourself from the risks that come with that. Obviously, if you go down the regulated, qualified custodial approach, those providers obviously come with insurance protections as well, which again, just provide that extra level of, managing risk and that extra level of assurance to your customers as well. So if we're talking about trust, and if we're talking about, ultimately building the trust back with end customers, we're talking about building that confidence back, these types of custodial solutions can be competitive advantages for exchanges that are looking to build that trust back. And insurance is part of that. It's a boring topic. It's not something that I spend my time on too much, but ultimately it's something that can solve a lot of issues in this space.
It's also something that's been quite hard for people in the crypto community to receive. I know that we've had some issues too. Well,
but we've seen the tide turn, Tracey. Though we've seen again back in 2021, one of the world's leading insurers was able to offer $50 million worth of insurance to certain institutional clients, and I've seen that grow to $500 million today. So their appetite's grown exponentially. Insurance is something that every one of our clients, whether they're pursuing a Fireblocks relationship direct or going to one of our regulated custodian partners, someone like Zero Cap, who I know you know well, whether you're going to them, insurance is central to their deliberations about how they want to do this.
Mm-hmm. All right, so
if I may just on that, Tracey, as well, just to bring in on the topic of insurance, is actually a conversation point around self-custody and insurance for individuals. And obviously I can talk from an exchange point of view and from an institutional point of view, obviously, for Bitgo and for Fireblocks as well, for their client base. But just to take it down to the self-custody route, the challenge would be for people to try and explain to their explain to the insurance companies how they conduct their own self-custody, educate the insurance company on an individual level about what they have in place to protect their asset class, an asset class that's got such great volatility in it, which is a plus and a minus. But if you're an insurance company, where do you track it? How do you track the price of Bitcoin, and how do you verify, are you keeping your self-custody in your sock drawer, or where is it, and all those different kind of points around it? I mean, I know it's similar to any other asset class. That's not to indicate that they won't catch up or catch the curve, but it's more about then these are the questions that for people who are engaging in self-custody conversation. Do you put this on your home insurance, but it's a financial asset, or is it not? Or what, all these different things, and NFTs, how do I get an NFT insured? And anyway,
that's definitely opening up a can of worms on that one. Just mindful, we've got 10 minutes. Let's bring it back through to really opening it up. But what do you think the future looks like over the next 3 to 5 years with regards to security solutions?
Sorry, we just had someone ask a question. Did you want me to address that Tracy?
Yeah, sure. Where did that come up? Sorry, guys, I didn't see that.
No, there was just another image come up. Yeah, no, that's okay.
And I actually missed the question. David, please, you take the floor, mate, but can you repeat the question, Tracey?
I was saying, what do we think that the landscape looks like in regards to the security solutions in the next 3 to 5 years? Because things could change dramatically. Do we have any thoughts on where we're going with this? I mean, obviously, it all comes down to regulation and what might happen, but do we have any forward-thinking thoughts?
Yeah, look, I think if you look anything beyond almost a fortnight in crypto, you kind of, it's pie in the sky stuff. The recent bank runs in the US, have been indirectly impacting crypto, and then there's been everything that's happened in the last few months. So predicting that far out is very difficult. It will come down to a lot of regulation, which you say, but we've touched on kind of the banking point, are custodians kind of the new banks. Don't know if that's necessarily the right way to look at it, but I think, ultimately where we've got to get this industry, we've got to work together. And I don't want to say we've got to become more like banks, because, the last couple of weeks have given, definitely the crypto bulls and the pro cryptos a lot of ammunition against banks. But, perfect isn't the goal, but ultimately we've got to, try for the same level of reputation and security standards that banks have, and that trust with, end users, with institutions, and that kind of, obviously partners and institutions that can help us grow as an industry. So, I think that's ultimately what the future is going to look like as the regulation comes in. We can aim for that better standard that, I think Caroline said before, we've gone through puberty on a global front and in front of everybody. It's now time to kind of get the adults in the room and sort of operate in, a more grown-up way that's maybe less exciting in some ways, but ultimately, is more trustful and obviously more secure.
Mm-hmm. I think that was well said, but I'm not terribly bullish, respectfully, on the timing around custody. The token mapping exercise has been, informative, educational, but it's going to be a long process. Nothing's going to happen this year. Custody is coming soon, but that's again more deliberations. So what's that mean? 2025 before we actually get something through Parliament? Mm-hmm. And then what does that look like?
How will that change things, Shane?
Pardon?
And how will that actually change things?
Well, it depends what it looks like. Is it nothing but a big stick and focused on punitive exercise, or is it something that's going to support the industry and bring all of these wonderful Web3 entrepreneurs and get them, not looking over their shoulder, but rather empowered to go to business and hire Aussies and Kiwis and get some money going in the economy, because otherwise we're just going to lose it to Singapore and Hong Kong. But I think rather than regulation, it's about up to vendors like us, organizations like those that are represented here to innovate. Fireblocks, we empower self-custody to our clients. The direct custody model is what we believe in, but we're bringing in new features. We did something on the back of the latest debacle. We put in something that's an off-exchange feature, which is an incredibly hot topic at the moment, but it benefits the exchange as well as the hedge fund or trader that's on the exchange. It means that the funds don't get locked up in a collateral vault they do get locked up in a collateral vault that protect both the exchange and the user. And based on certain scenarios, the funds can be unlocked on either side. So that sort of innovation, the innovation that we're seeing in Web3 around the different methods that we approach that, and in DeFi, that innovation is going to provide surety to the broad ecosystem of builders in this space.
Well, so then maybe let's talk about that for a bit then. What are some of the challenges that you're facing as a sub-industry that you're working on as businesses at the moment?
I've spoken a lot. Caroline, do you want to go, or do you?
Well, for us, with custody, I think, so any business that's not government-led ultimately goes to zero in terms of the cost of the charges, the fees that you can charge clients ultimately goes to zero. And the difference thing with crypto versus traditional finance is that in TradFi, you're always expected to pay. You always knew there was a custodial fee. That's not been the case in crypto, certainly not here in Australia. There is an automatic assumption you just assumed, I don't know what, people didn't really necessarily realize what it was they were paying for with custody. And I think that as it becomes regulated, and we're going to have to prove that we've got, appropriate custodial standards in place, there's going to have to be a shift in mindset, I think, perhaps with Australian consumers. I think maybe one of the trends that we could see on the back of it will be far greater self-custody at a retail client level. And I would agree that there's still a huge benefit for institutional custodial arrangements because of the size of the value, but also the opportunity around trade settlement that you've identified, Shane. Those are the opportunities perhaps at the larger end of town, but for the smaller end, for the more regular people, I expect we'll see a trend of far greater self-custody, and there's no harm with that. I think too, it points to a far greater trend within society, this move and this comfort with regards to both digitalization and also the benefit of independence that comes with that, the ability to make your own decisions and stand on your own 2 feet. And that has ripples, I think, to not just in trading of crypto, but in understanding some of the ethos and the thinking behind crypto. And I'm meaning crypto distinct from a stablecoin, distinct from a CBDC, the actual thinking, the philosophy, the inherent nature of control, self-control that comes with cryptocurrency. But maybe I'm saying that because I've been in the scene too long and I'm drinking the Kool-Aid. But that's for me, because that is a fundamental shift, right? I mean, and even from looking at it from an Australian consumer point of view, they're not used to that within their financial services providers. And I think there's going to have to be that shift that comes with it. But I think we're moving in that direction anyway, and inherently. So yeah, that's kind of my thought. I'll pass the conch again. David, throwing you under the bus. Your turn now.
I don't know if we've got a lot of time. I think, again, Caroline, you kind of answered the question well. It's we're just in this, I was involved in fintech really early in this country when we went through the open banking conversation about, what was that, 8 years ago, maybe. And it's a very similar conversation with the regulators then as it is now. And, I'm out of that history now, and I can say that we got that regulation wrong. And it doesn't work how we were hoping it would work. It didn't enable customers. I'm hoping we get it right with crypto, and that's ultimately where we all want to see the market go. We want it to really enable Australia as an economy. We want it to enable people to use the benefits of all the different versions of crypto that we've spoken about today. But we are just in that stage of the consultation, the figuring out what it looks like and what, ultimately is going to make the most sense for us as a market. So it's a really interesting time. I love this phase of an industry. It's definitely, once the regulation's in, it kind of gets a bit boring, but now is definitely the most interesting time. But the next couple of years are going to be really critical for us.
And if I may just jump in on that, I think there's been a narrative out there that somehow cryptocurrency is something to be scared of. And we keep on going on as an industry. It's just technology. There's nothing to be scared of. And when we think then about regulation, you shouldn't be looking, not that you are, David, but we shouldn't be looking to regulate tech. We should be looking to regulate the people who are operating, the people behind the technology. And that, I think, is where we need to put it. And then back off.
Let it go. Let it go.
Do a thing and see the benefits that come with it, and an international standard, but also locally the benefits for people. And what's wrong with having a digitally conversant population? Like, there's nothing wrong with that. It seems to be okay for Sweden. Why can't we see some of that here? So yes, it's don't bother with the tech, but don't over egg on the technology. There's nothing to be afraid of. It's just tech. It's just the human behaviors that we need to put some rigor around, and then let us do it.
I think there was a question that popped up there for you, Dave, as you were speaking. You said we need to get things right, and the question was, what is your version of getting it right? It's a pretty loaded question there. If you want to give it an answer, Dave, what's your version of getting it right?
Look, it's also probably going to be quite self-interested as well. But look, I think I answered it before, which is, we ultimately get compared to TradFi for very good reasons. And we're not there yet from a reputation and security standard perspective in the broader community. When there's bull runs in crypto, we get people coming into crypto and interested, but we need those people to come in and stay in. And so what is right? It's a broad answer, and it's probably not, what whoever asked the question is looking for, but it's to get that level of trust and security in the industry where people you know, to Caroline's point, don't look at it like a really risky thing. It's something that enables something new and, you know, can open up a whole new area of opportunity.
Once again, I think that's what's come through in this panel, and the panel before too is about trust. We know that we're not going to see, you know, mass adoption through retail again anytime soon until we do have that trust. But I think, you know, everyone's putting in place the measures that we can to get to that point. I think we do have a few minutes free, 3 minutes in fact, before we do finish this up. So again, thanks to everyone for jumping on here and giving us your thoughts. But if anyone's got any closing thoughts around even what the market's doing right now to give us a little bit of hope and to finish on something positive. Caroline, you've always got some positive things to say.
Yeah, no, it's not that I'm some kind of like bubble of optimism. I think it's more that I'm 20 years in this gig, more and in financial services. And it's not that I've seen it all, done it all, but like nothing new ever happens in history. It tells us the answer every time. You just got to go back. And to be honest, if you look at what's happening now with the banks, you don't even have to look that far back to find out the answer of what comes next. I think every time we see an issue in crypto, the crypto industry is better on the back of it. As I said, we're going through puberty in full public glare, but we're growing and maturing with every single one of those. And I agree that it's quite right that retail shouldn't be coming into an industry if they can't trust it. I think that's absolutely fair enough. But the industry has responded, and the good actors within the industry have responded accordingly. And that's a worldwide phenomenon. That's just not just in Australia. But from an Australian point of view, I mean, with some bias, I suppose, because I'm a member of this community, but you know, when we meet up, there's no collusion within the exchanges, or certainly not with B2C markets, but the commitment from the peer group to creating something solid for Australian investors to come into, that commitment is unwavering. Whether you're in CBDCs, you're in stablecoins, you're in NFTs, you're a crypto exchange, you're a custodial provider, whatever you're into, the commitment to the Australian investor has just been as clear as a bell the whole way through all of these different crises and experiences that we've had. And the community rallies, right? It's there to support each other, as well as being competitive. I mean, come on, you're not going to be competitive, but you can still be supportive of each other as we do it. And I don't know if that's the same everywhere else. I know in Singapore I had a really positive experience. I don't know what it's like in Europe and the US, but definitely here in Australia.
Yeah, and we do have. Sorry, Shane.
I was just going to agree. I think the passion of the community is, I've never been part of a community before, you know, I come from big tech and I assure you it's just competition. There's no passion, you know.
Absolutely. Couldn't agree more. And look, that's just, you know, look at what's being organised today through Blockchain Australia and everyone's, you know, enthusiasm and participation in today's events. So I'll take this opportunity to again thank Amy Rose and everyone that's participated today and been involved. So thanks, everybody.